So we are back with STOKR's AMA session. This time we talk about the Blockstream Mining Note, the former, which has been matured a few weeks ago. We have started payouts on Friday very successfully, and we have again our beloved guests Adam back and James Macedonio, and here's also Arnab Naskar with me, my co-founder of STOKR. So we will dive a little bit into the Blockstream Mining Note, the former performance, how it is different, but also different to the Blockstream Mining Note 2. So Arnab, you want to give a little bit of a background of the Blockstream Mining Note 1, and then we can skip over and explain a little bit more in detail what are the differences, also the market is a little bit different than when we have launched the Blockstream Mining Note 1, right? So I give you the floor.
Thanks a lot, Tobias. Thank you. Yes, BMN or Blockstream Mining Note has been a fantastic, flagship product, I would say, for the entire asset tokenization or real world asset tokenization world. BMN1, that is the first version of the Blockstream Mining Note, was issued in 2021. July 2021, the mining started, and 2024, July, this mining actually ended, and this product got matured. This product ensured that investors have a fixed hash rate for a period of 3 years. In this specific case, for the BMN1, it was 2000 terahash per BMN node. And each BMN node was priced at nominal value of 200,000. And now the BMN node provided a very interesting return, and we can go in more in details. And the BMN node, what is interesting in that way, it provided an opportunity for a lot of investors to invest into Bitcoin mining without going into details of managing the energy prices, uptime, downtime, and all these kind of things, right? And that allowed a lot of professional investors, family offices, ultra high net worth investors to invest into the product without going through all the complexities of managing through different hosting service providers. But on the other side, we saw during the course of the 3 years period, a lot of secondary market activities took place, right? And a lot of people bought from different exchanges, bought on a P2P basis on SiteSwap. I would say in theory or in practice, what we saw, the BMN provided a fantastic opportunity for investors to enter into the mining space without managing a lot of hassle. Now we are into BMN2 phase. The BMN2 was announced on 18th of July. It's currently live on STOKR. So you can see on the link below of the BMN2. And we will go into details of the BMN2, but I would request if Adam, you would like to give kind of a quick note about what is BMN2 and how it differentiates from the BMN1, because you're the core architect of that product.
Yeah, so quite a number of things about BMN1's design we enjoyed making, and one of the interesting things is it's fungible. So even though there were multiple series of investments during its lifetime, the BMN1, they were all fungible. If somebody bought in Series 2, they had an asset that neither diluted or anti-diluted the investors in Series 1, and so on for all of them. So that made a nice unified market, and we have some data about actually liquidity, that there were significant amounts of it traded during the product life. Now, BMN2 retains that feature. It extends the term. BMN1 was 3 years, BMN2 is 4 years, so it gives the full halving experience. Generally, of course, with Bitcoin-related products, longer term holding is better. So that was, one of the rationales for the 3-year term, and now for the 4-year term. The other thing that's different since BMN1, there are more efficient miners in the market. So we're looking at miner models. We use MicroBT, good miners available at the time in 2021, but now it's 2024, and the miners that are available are about literally twice as efficient electrically. So that is part of what enables the launch $90,000 price. And the other point is there's a new metric. So with BMN1, we actually had 2 petahash per unit, and with BMN2 we have 1 petahash per unit. So a couple of reasons for that. One is there's a kind of minimum, regulatory minimum that we wanted to stay on the right side of with BMN1, and the prices have improved, so we can do that with 1 petahash. And the other point is that Since BMN1 in the last couple of years, there's been a new metric introduced, which has kind of taken hold quite well in the market, called the hash price. And it's measured in petahash per day. So it's quite a convenient metric. You can look at the price history, and as Tobias will pull that up as we get a bit further in, that shows the sort of daily amount of mined value in dollars per petahash of hash rate. And so it's convenient to have that same unit, but a hash rate contract, coincidentally. So 1 petahash. And then how people are pricing hash rate contracts. Usually hash rate contracts are much shorter than what the BMN2 or BMN1 provided, maybe 6 months, and James has some experience in the market on those. But the way that people price them is they just take the daily hash price and multiply it by the duration. So here that is, 4 years. And so it's just a convenient metric. So that's another benefit of having BMN1. So there are some other more regulatory things that perhaps Arnab or Tobias would be a better place to talk about in terms of the minimums, the types of investors. So there's a bit more flexibility as STOKR has continued to, expand its license coverage in Europe and internationally.
Yeah, absolutely. I think we have built on the tested legal structure of Blockstream Mining Note, the Blockstream Mining Note 2, and we made small changes, specifically, I think probably very welcomed for investors, because now we can indeed cater for investors who invest a minimum of 10,000 USD when they qualify as professional investors. And we at STOKR, we have been working on making this happen by working with different service providers who can now do the professional investor test for the investors. So this is something now available on our platform, and this we have also built in now in the Blockstream Mining Note 2. That's a big improvement, I think. Yeah.
Also, I think one another point is the BMN1 was divisible up to 2 decimal point. Now BMN2 has the opportunity to being divisible into 4 decimal point. That definitely makes it, the rounding error was a big issue, and also making it in the fractional in the secondary market, even on the exchanges, right? So that's kind of very interesting. Now, I think, Adam, you mentioned about the hash price, and maybe one question already comes to the mind over here is how the hash price based product benefits the investors, right? Does there any investor benefit in that way when you anchored the product with a hash price basis?
Well, I think it's just a convenient public metric. So the market has matured in the last 3 years. So I think people have become more sophisticated in their understanding of mining, and of course, really to understand mining as the BMN1 investors did, it's good to actually have some exposure, and then that helps you have the motivation to understand and learn over time about how the market dynamic works. So the hash price metric is quite interesting because it's showing you a number that can change in the market cycle. And this is, thank you, and I just pulled that up on the screen, and you can see that over the last 5 years, the hash price has varied enormously. So currently around perhaps $55 a petahash per day. So this is the amount of Bitcoin mined per day multiplied by the current price that 1 petahash of mining produces. So it doesn't talk anything about the efficiency of the miner. So it's the same metric for all miners, basically, right? And you can see that for large past history, the hash price was a lot higher than now. Quite a bit of the history was above 100, periods above 200, 300, even $400 per petahash during the bull market. Now, this is, it's not about the input costs, it's about the economic value mined on a daily basis, right? So, in effect, there is, if you look at the BMN2, it has and divide its $90,000 by 4 years, you get to a petahash price around $61 per petahash day. So that is a very low, it's quite low on this graph. And so anything above that graph represents profit if you assume that, history will repeat. And generally, it shows that this is a different graph to the Bitcoin price graph, but it shows that the hash price is like around a floor level because, unlike the Bitcoin price, which can go anywhere that the market dynamics say, with a hash price is a floor because, it's basically the cost of the mining will be a floor value. So if it costs more than this to buy miners at the prevailing price, to take on hash rate contracts and operate the miners, then the hash rate will fall. So, from that point of view, this is an interesting way to look at like what the real time value of BMN2, multiplied by the duration would have been historically. And I think it's reasonable to assume the hash price will have to improve, because it's kind of at a low level now. And so before there's before there's meaningful increase in hash rate, the hash price will have to improve to sort of economically incentivize people to put more hash rate online.
So in terms of BMN2, I understand that what you're trying to do here and what you did actually, you put a price floor or kind of a fixed price floor for a period of 4 years here, right? So even if there is an increase in the hash price, effectively, investors get the upside. James, I know you're following the market very closely. Do you see any similar product in the market that is actually providing the hash price based financial opportunities or investment opportunities to the investors? Well, and how it compares with BMN2?
Yeah, well, you have a couple of different products out there. You have one, you could actually try to self-mine, which is very complicated to get into the business. It's a lot of moving parts, right? To look for, even if you're just doing hosting through another organization, you have to deal with contracts and and hosting prices, which are pretty high, and have the most likely going to keep going up with the competition that we're going to see with AI on energy, right? And as profitability of BTC, as the BTC price goes up, and if you see a bull run on BTC, then hosting prices will go up as well. So they'll start diminishing the margins that people could make by getting into traditional mining. The other one is hash rate contracts, which we've used in the past. And they're basically running off the hash price. So the hash rate contracts that we see are typically 6 months or less. Rarely do we see something past 6 months. So you can look at the hash price curve, which is pretty flat right now, but you don't see anything out as far as 4 years. So in that respect, the BMN2 has no competitive product out there. Yeah, there's. I looked at. We typically look at Luxor's hash price curve, and we work quite close with them on a few things. I think I sent it to you. There you go. Yeah. So it's a bit older, but you can see. Today the hash price is sitting around 55. This is a few weeks old, but you can see the curve going out 6 months is still pretty flat. In terms of USD denominations. If you look at it from if you're looking at BTC denominations, you can see the curve going down a bit.
Right. So I mean, it's interesting because I think if folks look at the yellow data points, that's effectively saying that this is some kind of floor, right? So currently it's above this, like around 55, but still historically very low. And what it's saying is the hash rate curve is basically what people are willing to pay for hash rate contracts with different durations going into the future. And you see, nobody's willing to sell them below this price. As James said, this is a few weeks old. So that means that their expectation is if profitability were to decrease, the hash rate would fall. So it's saying that, this price shouldn't really go down below this. And so in effect, you are buying, the instrument is a bit like buying this price, but your cost of buying it is a fixed upfront cost, 90,000, which works out to about $61 compared to the current 55. But it doesn't change over the duration, and then we had that previous graph up, which shows that in a bull market, it will go, in the last bull market, it went up to $400+ a day. And so anything above the 61 is profits. And, for somebody sophisticated, they might be able to find ways to arbitrage it even, right? Where they could, effectively sell BMN when the hash price is up and buy it back if the hash price gets down to these kind of low levels. But anyway, I think it shows that there's a very interesting entry point for hash price correlated financial product like the BMN2.
So the BMN2 is probably the easiest way to get into mining for 4 years, right? You're looking at today's hash price at around $55. Us locking in for 61 and change is I think is a very, very good bargain if you look at it from a 4-year comparison, right? A 4-year term. There's nothing else out there every 4 years.
If we could go back to the hash price 5-year graph to this.
So as Adam was saying, anything above the 61, that is basically our hash price offering is going to be pure profit. So if it does jump as high as the 400 where we've seen it before, that's a tremendous amount of profit in the BMN2 product.
Right. And I mean, I think the other thing to note is you are sort of benefiting from some effects. So once you are exposed to a hash price related product, anything that sort of takes hash rate offline or makes it more difficult or more expensive for people to put more hash rate online will extend and improve your profitability. So what happened right after BMN1 started in July 2021 is the China mining ban. So China did some version of banning mining. A lot of hash rate went offline and tried to get moved internationally. And so the hash rate was low for about 6 months. And that provided a good profitability boost to the BMN1 product. And if you look at potential factors for BMN2, it's the same kind of net effect, but there are different factors in play at the moment. So one is the enormous rise in AI demand. And so that can, even though it's not Bitcoin mining, it's competing for the same resources that Bitcoin mining is competing for. So one is the manufacturing capacity to build new miners to put them online. So if you imagine, cast forward and we get into a bull market, in the relatively the next year or so, then there'll be demand for miners. And as the AI workload is rapidly putting gigawatts and gigawatts of GPUs and AI computers online, they are placing enormous demands on the foundries like TSMC and Samsung. And so it will make it more difficult for mining manufacturers to produce more units. And so, if it's difficult, if there's a shortage of Bitcoin ASICs, the hash price can be high and nobody can do anything about it. And that's a bonus to anybody who's already mining on a long-term contract, what we are here. And then the other factor is that to illustrate the size and scale of the AI workload, it's already overtaken Bitcoin in terms of total amount of deployed megawatts doing AI training and service provision. And so they're competing for power access too. And you see some of the public mining companies announcing diversification into AI workloads. Now, one of the reasons that can impact the ability to put more Bitcoin mining equipment online is the AI buyers are less price sensitive. So they will pay more per megawatt, and so sort of price you out effectively. So people who are looking to bring miners on as they get into a bull market will find the prevailing power price going up. And the reason is basically that the AI equipment is a lot more expensive per megawatt. And so the actual power cost is kind of, not the main driving force for them. Whereas with Bitcoin, it's a significant input cost, and people who don't secure, reasonably low cost and stable power will tend to get pushed offline and not make it to the profitability level.
Yeah, to add to that, even if the power prices don't rise that much, the hosting providers that are offering the capacity will charge more for hosting in the facility because they can get away with it because AI is not as price sensitive to as Bitcoin mining. So even if energy prices go up a certain percentage, you might see double that, if not more, from the hosting provider because they can get away with that kind of profit margin because of the demand.
Right. Yeah, definitely. I mean, there is an element of surge pricing in miners and in mining. So in a bull market, everything gets surge priced. So the ASICs, the manufacturers will start surge pricing those. There's evidence from the last bull market that prices went from around $25 at the beginning of that market to over 100 to 110 even per terahash. People are pricing miners in price per terahash in that market. And then, as James said, if there's only so much power online and people can see that mining is very profitable, as people's contracts expire and they come up for renewal, the people doing hosting, and James is responsible for selling Blockstream enterprise hosting, James will be negotiating for a higher price because if the customer's making a high price and there's a shortage, that's a recipe for the price to go up. So now at this point, how we're able to offer the BMN2 at 90,000 terahash petahash is that the miners are still relatively cheap because the hash price profitability is not super high right now. Like as we said, the hash prices looks like a kind of floor price range. So we're actually picking up miners for a good price. So if somebody were to buy BMN2 in a later tranche, in a later series, in a few months, in 3 months, 6 months, the price per BMN2 is likely a lot higher. And so that would reflect, right? So because BMN2 is a tradable product, so like BMN1 was traded on SideSwap, Bitfinex securities, and merge platforms, then when people come to buy a Series 2, they could either buy it off an existing customer, or as we introduce new Series 2 machines and hash rate and hosting, that's going to reflect the market pricing at the time, right? So we'll be paying more to the manufacturer for the same kind of class of miners in a market that has a higher hash price. And so those two things come together, and ultimately our cost to bring new BMN2 to market is going to be presumably quite closely correlated with the market price, because people can look at the input metrics and work out, and they can also see how many Bitcoin have been mined in the first 3 months, prevailing price for this kind of class of miner, prevailing enterprise hosting rates, and get an idea of what the resale value should be. And of course, the other way to price BMN2 particularly is to add up the market price of the Bitcoin mined to date. Let's say it's 3 months in. That's on the dashboard, so you can just multiply that by the current price and then add in, if it's 3 months, then it won't be a 48-month contract. It'll be a 45-month contract. So you'll take the hash price multiplied by 45 months and see what that adds up to. So those two things sort of triangulate, and the intersection of those is like roughly where this would be priced on an input cost for us, and presumably in the market if people trade in and out of it.
I think one thing, I think James, you mentioned, because just to give one point here, because we are hearing a lot of feedback and a lot of questions also during these last 3 years. When we issued the BMN1 in 2021, it was around 100 exahash, the global hash rate, right? And then there was a huge increase of roughly around 600, like 6 exahash in that way. And the entire angle was that, hey, we understand that if the Bitcoin price goes up, the hash rate goes up, but if it falls down as the miners pulls out, the hash rate also goes down. But this did not happen in the last halving cycle, right? So my question is, James, what was the reason that, according to you, that it did not happen that, and how you're considering that this halving cycle there will be some kind of correction in the market coming?
Well, I think we predicted the hash rate to drop a bit because there's a lot of inefficient miners out there. A lot of M30Ss, S19J Pros, a lot of folks have been mining them up to the halving. Post-halving, if you're sitting at a hosting rate of 7 cents plus, your break-even point is gonna be above what your costs are. So you're gonna end up being in a non-profitable state. So some people just mine through it, others choose to shut down, and the people who shut down, that's where you're seeing the drop in the hash rate. I do think that this is temporary, right? So the empty slots that these inefficient miners are taking up now, you'll see either people who have the capital to upgrade and buy more efficient miners, or you see some of the public miners or the people who do have capital replacing those contracts and putting in more efficient miners. So, I do anticipate the hash rate to jump a bit, but we did predict the drop. And if you look at it historically, I think Adam can speak to this, but I think historically you see that trend during most of the halvings, right?
Right. I mean, if you look back to January 2023, about 18 months ago, Bitcoin price was quite low. It was around 15,500 at that point. And since then, the Bitcoin price has gone up by about 4.3 to 4.5 times, so a lot. And the hash rate has also about gone up by about 2.3 times. So it's gone up significantly as well. And then we have the halving. So things are sort of in a similar position, but I think the profitability from that point of view should be similar. Of course, you still have the fees, even though the halving has happened. And the other thing that's changed is the efficiency of the machines. So the kind of machines that James mentioned there, the M30s, SJ19 Pros, they are not really break even on prevailing market hosting rates. And so but the new machines are approximately twice as efficient. So if you put all those things together, there is some profitability in mining a modern machine today, and the current conditions are sort of causing the hash rate to drop a little as the old machines are taken offline.
And another thing with BMN2, when you compare it to trying to host on your own, is a lot of complexities in getting into it, but you don't have to worry about miner failures or any kind of curtailment of energy, right? So that's kind of built in already to the BMN2 product. And in that you could be down, depending on who you're hosting with, you could be down quite a while if you have miner failures.
Right. I mean, it's particularly problematic for people with a small number of machines. Let's say you have 3 machines and one fails. That's an enormous hit, right? So within the BMN product, there's 2 factors that help you there. One is that the failures are socialized across all of them because there are thousands of miners in place. So if one's down, it's a very small percentage. And the second point is that Blockstream, in the hash rate contract, in a financial product, we cover the first 10% of equipment, and we give you, the 1 petahash defined even during like any kind of curtailment related things. So curtailment just means that people are the power prices are changing in real time, and so sometimes if there's a hot day, they'll switch off a part of the day, things like that. So we normalize that also. So you get a petahash if it says a petahash. If a lot of machines failed above the 10%, eventually you might start to be impacted with that if they're not economical to repair. With BMN1, that didn't really play a factor in the end. But I know it's a comfort to users because some users have been either mining themselves or mining with a kind of more self-managed hosting provider that is literally, giving you a dashboard access to your 3 machines or your 10 machines, and when one machine's down, that it creates a lot of anxiety and support tickets, and the actual time to get a machine repaired can be quite long. So we basically, if a machine fails within that 10%, we'll hot swap it, so people won't feel the impact.
I think one important metrics that in the pitch also we mentioned about the cost of acquisition of Bitcoin, right? And there in the documents, you have mentioned that the cost of acquisition of Bitcoin via mining is even cheaper compared to DCA. Would you like to elaborate that angle?
Yeah, I mean, that's certainly the way it worked out for BMN1, which is the BMN1 product outperformed DCA. So it's like average, the first two tranches were had the best performance because of the entry price at the time. But, it outperformed a lump sum buy of, buying Bitcoin instead of buying a BMN1. So BMN1 actually returns more Bitcoin than doing that. And it also outperformed dollar cost averaging. And if you look at the kind of hash price, effectively you can see that mining implies acquiring Bitcoin at a discount. If you were mining and it cost more to mine the Bitcoin today than it did to buy it, people would stop, right? And so sort of definitionally, that is a flaw. Nobody's going to want to mine when it costs more to mine than to buy. So effectively, you are inherently going to outperform dollar cost averaging. Modulo, the kind of luck of the situation in terms of the equipment purchases, because that's a capital outlay that you're looking to make back from the fact that you're mining a dollar cost average basis. But baked into the $90,000 is the fact that the machines are still quite cheap at this point in time. Now, there's a reason for that, which is kind of excess equipment in the market. So in the bull market, people bought a lot of machines speculatively, going back to 2023 and even into late 2022, and bought a lot of miners assuming that the market would continue to run up a lot further than the 69,000 they ran up to in the 2022 timeframe. And so when you buy miners, they take quite a while to get delivered. And so that inventory is still sitting around, and some of it is unused, new in the box. And so that's kind of depressing prices. So effectively the BMN2 price point is helped by that. And so that means that your dollar cost average effect is improved because there's, the capital outlay component is a lot smaller than it would have been. If you start a BMN-like product, or you buy into a series, let's say later this year or early next year, where the inventory, the oversupplied inventory is exhausted, the miners are starting to surge price, the hosting is starting to surge price, then there's a significant capital outlay component above the hosting costs that you have to recoup, so it increases your risk. So I think it's a kind of de-risked entry point from that point of view. So really kind of interesting entry point time in the market here.
Yes, I think like you have mentioned a very interesting point, because when you're buying a spot BTC, your market timing is very critical, right? Whereas in DCA, that's what actually kind of you're hedging in that way, or kind of, you're eliminating that risk of identifying the right time frame. And the same is for the BMN. So that gives kind of two opportunities at the same time. No, I think like one interesting point also on the BMN is the volatility angle, right? And this is, I think, a topic always comes in when you discuss on the BMN, right? Because the Bitcoin is by itself quite a volatile asset, and definitely some other assets are much more volatile than Bitcoin, but Bitcoin's volatility is matter of discussion always. Now, the question we also get from the investor is, does BMN introduce the investors to a different volatility angle, or it's less volatile? And I think if you both can share something on that. And Tobias, we have a very interesting chart actually that Blockstream prepared on page number 15. If you can bring that, that will be great. So James or Adam, feel free.
Well, I mean, I think what we found with the BMN1, and we extended the back testing with the last 3 years of data. Yeah, so basically, Tobias has brought up the information in the documents about volatility, and this is just kind of back testing. If BMN2 had been issued 4 years ago, what you would have seen. So this is different from BMN1 because the term length is different. And you can see that the volatility is relatively low. definitely lower, about half as much as Bitcoin itself. And, yet it's also, outperforming dollar cost averaging, which is quite interesting. So effectively the cost of opening the position is related to the miner price. So effectively you have a low entry cost to benefit from the low volatility situation. So I think it just means that you have an expected return, which is kind of subject to less swings. So as Arnab put it as well, it's less sensitive to the timing of the entry price.
Once you have some exposure to Bitcoin, this provides an additional opportunity to accumulate more Bitcoin at a different price point, right? That's how I personally see, and that actually excites me also about working on the BMN for last 3 years, and now again going forward with the BMN2. Do you see any other angle, like what kind of people should be eager to look into BMN? So what kind of profiles that you consider suitable for BMN?
Well, I mean, we've seen some interest from family offices and Bitcoin holders, people looking for a Bitcoin correlated but de-risked diversification or a way to grow a position with a lower risk profile. Also funds, looking at it as from a fund management perspective to have a de-risked component to a fund. So for example, if they can borrow dollars against other assets in the fund, then the BMN2 looks quite attractive if you look at the hash price history as a dollar return. So I think it's an interesting adjunct, and I think the other thing we were thinking when we started with the BMN. So there are a couple of data points. One is that Blockstream itself did some prop mining, i.e. mining for the company itself with equipment bought by the company. And this is before BMN1 even, so some years ago now. And what we found is that we did it at a time when the Bitcoin hash price, the Bitcoin price fell. So when we finished mining these miners, the Bitcoin price was lower than when we started, and yet we found we made a dollar return from the money invested. And so we were curious why that happened and went back to it, and that was part of the design of BMN1. And basically the reason was that because the price fell, the hash rate fell, and we ended up mining more Bitcoin than we expected. And so effectively there was about a 50% fall in the price of Bitcoin in that period. And we mined about 2.5 times as many Bitcoin as we expected. So we made a 25% return in dollar terms, as well as having more Bitcoin, like 2.5 times as many Bitcoin at that time as if we just bought, right? So you get this kind of downside protection phenomena.
James, I think this is also maybe a question for you, is where exactly Blockstream is planning to mine? So where are the physical locations? Because this is a question always we get about what is the energy source, and where the locations and all these kind of things, if you can elaborate.
Well, we have, we have a few facilities. Most likely we'll probably put it in our Texas facility, Weston, Texas, which is an ERCOT location. But we also have facilities in Georgia and Montreal that we could leverage if need be. Right. And the energy prices in Texas seem to be the lowest. Texas has become a huge Bitcoin mining state.
And because we are seeing a lot of these hash rate contracts out there in the market coming from Latin market and all these things, right? How do you see geopolitically how the North American mining facilities are positioned compared to the other emerging economies mining facilities? Because what I'm hearing, they're much more cheaper cost, right? Why don't you go and get some cheaper energy in those regions?
Well, yeah, if you scour the globe, you can find cheaper energy, but you have to deal with the political environment in those scenarios, and also the operation costs go up and your build costs go up, right? Unless you have strong partners in those areas. So we found it's still cheaper to do things in Texas as opposed to like Paraguay or if you go into Africa, that a lot of folks will get into, or the Middle East, folks are going in that direction. But if you consider the political environment and also the additional operational and build costs, we still feel Texas is probably our best bet right now.
Yeah, there are some economies of scale to be had as well. So we've built up some relatively large facilities. So your kind of capital investment, which is something that Blockstream has to factor in, will improve as you have a larger site. And so that's something else to consider if because you could try to do some BMN yourself, right? You could get some additional capacity to a small industrial unit or upgraded power supplies to your house. But if you factor in your time and the capital outlay, you won't have a very good power price, and you won't have the economies of scale. So we're running tens of thousands of miners on the site. So I think that's a reason as well. Now, geographic diversity, of course, is good, and decentralization is good. So one of the reasons that we at the company level were quite keen to get involved with mining is that we felt that any individual or company that has a Bitcoin position, or they own some Bitcoin, it makes sense to participate in the mining to protect the rest of your Bitcoin. So if everybody is doing some small percentage of their Bitcoin holding in mining, it won't materially change the value of their overall investment, but it will mean they're taking a direct participation in sort of influencing and controlling and ensuring that the hash rate is being managed by somebody with an aligned economic interest, i.e. you hold Bitcoin or your company holds Bitcoin, and you want to make sure that the Bitcoin network is decentralized and that people doing the mining have an aligned interest that they want to see Bitcoin protected. So I think effectively, if a lot of people did that, the Bitcoin network would be more decentralized and therefore more secure.
Yeah, I think that this is kind of always the question comes in, right? And like this is, as Adam, you also mentioned, right? The Blockstream has to put a lot of capex investment into the equipment before it starts mining. And when the BMN1 was launched, that was actually one of the interesting angle for a lot of investors. When I was talking to them, that's when I'm investing, I don't have to wait for 6 months, 7 months compared to other competitive hash rate contracts, right? Your Bitcoin is being mined from the very next day when the offering is hitting close. So once the offering, I think after the second series, from third series, investors get exposure to the mining immediately. How do you guys do that? How do you guys ensure that on the very next day, the Bitcoin gets mined for you as an investor?
Well, I mean, so with the BMN1, the first series was sold in March with power up starting in July. So there was a bit of a lead time. And at that time, we used some of our own capital actually to secure a pipeline of miners. So we'd be less subject to the surge pricing phenomena. And effectively, it reflects in the price. So, when it came on to series 2 of BMN1, actually the reference price was the same. They were both 200,000 euros, but in later tranches, the price was higher, in part because they'd started to mine Bitcoin per unit. The price of miners started to go up, and the price of hosting. So effectively, if you join in the early tranches, then it powers up relatively soon. If you buy in the market, like on a secondary market, or you buy in later tranches, it's mining the instant you buy it, basically, right? So now that is quite a contrast to what will happen for somebody who tries to do it themselves. So in a normal market environment where there are no excess miner inventory, you would have to pay for the miner probably a minimum of 6 months in advance to receiving it. And in a bull market, that grows longer. It can become one as much as a year, 9 months, a year, or even over a year before you've received the miners. And big miner orders come in, they'll deliver it over 12 months, right? So you'll wait 12 months for your first batch, and then you'll get 1/12 for the next. So so you get your last miner, it could be 2 years from when you place the order, and you have to prepay significantly as well. So I think the BMN product simplify, as James said, it's complicated, but one of the things it simplifies for you is you don't have this experience. And we've certainly, because James is doing institutional hosting sales, and sometimes you'll have a high net worth individual or a fund decide to do some mining, and they'll contact us, and the conversation will go like, yeah, we want to start mining, and when can we start? And they think like a few weeks, but James is like, no, there's no inventory in a bull market. That'll be 6 months if you're lucky. And so actually, because of that inventory, we're able to resell them miners in our pipeline for the institutional hosting side. So that same pipeline helped us actually to deliver the BMN1, later tranches smoothly.
Yeah, and so it's really like Adam said. In the past, it's been took a while to get the miners in, but it's a timing gaming as well, right? So hosting providers don't want to have idle capacity just sitting there waiting for miners. So a lot of hosting providers will build just in time for the miners to show up. And historically, there's been a lot of delays in getting that up, getting those projects done on time. So the miners may be ready, and the hosting facility may not be ready at that point. So there's a lot of risks of doing it yourself. And with BMN2, with BMN2, we already have the capacity available, and we have line of sight on the miners who are looking to purchase already. So the time from when we close out and to get a physical environment up and running, it would be very, very short. And in the interim, we could even leverage a hash rate contract on the open market just to cover that period of time between kicking off and getting the physical inventory up and running.
Right. So I mean, that would be, for example, in a later series, if we exhaust the capacity we have online and we're waiting for another section of expansion, we would price it according to market pricing. And one way to assemble that might be to, buy a 2-month hash rate contract, buy the Bitcoin that they form a series of mined to date, by the miners, and put the delivery together that way. So basically, there's a lot of experience and operational tactical things that go into providing kind of smooth, fungible experience as you're buying into these series.
Coming to the legal question, Tobias, this is for you most on this point. So how the legal structure of the BMN2 looks like, and what is BMN2 legally?
So basically, we have replicated the same structure we have done for the Blockstream Mining Note, right? But we have modified a little bit from the learning. But we have again here a securitization structure in Luxembourg. We built on the past experience with a very good investor protection itself. So because what the securitization structures in Luxembourg allow is basically you have limited recourse obligations into a specific ring-fenced compartment, which is obviously bankruptcy remote. So when any party around goes bankrupt, it does not affect any of the assets actually the investors are buying in, which is held by the securitization structure. From a financial instrument perspective, what the investors get is again a note, a debt instrument. Here in comparison, with the Blockstream Mining Note, we had a 3 years maturity. Now we have a 4 years maturity. It was a little bit longer, but the intrinsics of the financial instruments are actually pretty much the same. And the below structure, I think James and Adam explained a little bit. Basically, we will have a hash rate contract, right, as an asset, and according to the hash rate contract, here we have per node we have 1 petahash mirrored in the hash rate contract, and everything which is mined or reflected in this specific contract will go to our compartment in Luxembourg, the Oro Fund BMN2. So basically, it's the assets are directly linked to the notes, to the debt instruments, and it's more really a look-through structure for the investors. So what they are buying is really the hash rate minus any costs which will be deducted on the way.
And the BMN2 will also have the ISIN number that we had last time. So this will be the process. But I think one thing, which is, as you mentioned also, because it's application time and everything takes time. But on the other side, this time, as Tobias, you mentioned that we have the opportunity to take professional investors who qualify via our partners, and then they can start with a minimum investment as low as 10,000, which allows investors to get exposure to BMN2, test the water before they can make a decision whether they want to go forward with a bigger ticket size or not. Also on the BMN2, one very interesting angle also like the liquid elements. So in that way, Tobias, you may maybe want to highlight the element of this STOKR's role as a VASP and STOKR's role as a technology provider in this space.
Like the different roles here, and like we are representing obviously STOKR. We have like a virtual asset service provider operating out of Luxembourg, and our main role is here like maintaining actually like the whitelist and enabling the whitelist, which means like the investors come into our platform, they do the KYC AML checks, and then they register the AMP ID, the wallet actually for liquid, where they receive then the tokens which represent finally that they are entered into the investor register of the Luxembourg securitization structure. So this is like one part, what we are taking care from a technology point of view. And the other part is, as that's what we have just like started last Friday, what we are doing like now for the Blockstream Mining Note is obviously like then the payouts ultimately, right? The payouts here we do together with Blockstream on the liquid network, so there will be LBTC paid out to the investors. I think we will see after 4 years time. So it's like hard to predict, but probably will be one of a similar process. What we are doing then at that point of time.
Yeah. So another point to the BMN2 is that Adam was speaking earlier about. It's a fungible asset, right? If you compare that to mining yourself or going through a hosting provider of some sort, you're locked in. You can be locked in 24 to 36 months, if not longer, and it's not fungible. You can't trade that asset. So if you're comparing it to self-mining, it's not. The BMN2 is much more versatile on getting out of your asset if need be, for whatever reason you may need to, because it's tradable on the exchanges, the secondary markets, and so on. Adam, you want to add anything to that?
No, that's right. I mean, as we mentioned, there was quite a lot of liquidity during the product lifetime. It looked like getting on for half of the BMN sold was traded at some point, like, or at least the trading volume was about half of the total issuance size. So maybe some people traded multiple times, some people traded held to maturity. But in any case, there was reasonable liquidity for people to, take liquidity early by selling in the market if that's what they need to do.
Yeah, but you can't do that through a retail hosting provider, right? You bought the asset.
Right. I mean, presumably the terms and conditions may not allow you to, or if you do, you're left with the parts, right? Now you have to sell a used piece of mining equipment. It's kind of like selling a used car that you bought new. The price will immediately drop to have confidence. And, the buyer then has to deal with shipping costs, risk, and find somewhere to plug it in where the hosting prices might change. So I think that's one factor. Another factor is with the hosting contracts, they may have variable pricing on the hosting too. So we talked about things getting surge priced at different points in the market. So that can impact the saleability. If somebody has to pay more for a new hosting contract, or even if you're mining and the hosting contract rates go up because it's getting into the bull market.
Yeah, and in case you have like additional questions, you can also reach out to the STOKR team, or you can also put your questions actually in the comments sections below. And also if you like the format and you want to hear more about this kind of activities, leave us also a like. And thank you very much. Take care. Thank you very much, Adam, for being with us. Thank you very much, James. Bye-bye, Arnab.
So long, guys.
Thank you.